Good morning, traders. Happy Saturday. Hope y'all are doing well on this fine Saturday morning, June 21st. We'll officially get started here in about 2 minutes, but I just wanted to make sure that I had my screens ready and my camera's good. How are y'all doing today? I know it's early, especially if you're on the West Coast or maybe international. Um, But this is a time I have on the weekends to do my prep work and go live because I spend time with my grandkids on Saturday afternoons and Sundays all day is family day for me. Um, Today we're actually going to my husband's family reunion here in Florida. It's down in Clearwater, so that should be fun taking the grandkids with us so they can meet all of their extended family on my husband's side. Well, yes, or last week was one for the books, I guess. How did y'all do trading last week? You can join me in the chat. I can see your chat. So, how was your trading last week? Mine was pretty flat. Not gonna lie. I had a couple of winners. I wasn't very active in trading. My entries just weren't setting up. Didn't get triggers to enter any trades, but that's okay because last week was very choppy. I mean, I'm looking at the ES weekly candle right now and price just really didn't move. It did hold above the upper yearly edge here, which is something that I'm watching closely. It's sitting right at 6,000 on the ES futures. Important level if bulls are going to make a run for a new all time high, they really need to protect that 6,000 level. We do have topping wick here from last week. That is a sign that there is selling pressure in this supply zone, which is exactly what I would expect as a supply and demand trader. We expect selling pressure in the supply zone and then buyers to step up in demand zone. Like I talked about last week, we have two zones very close together. When this happens, I just expect chop and not my favorite market environment to trade in for sure. And that's why my portfolio is very light going into next week. Bulls need to make a new all-time high to break out of this supply zone. For bears, they need to push price back into this demand zone. But like I said, in demand is where I expect buyers to show up, and since the pullback from early or mid February when we made the new all time high, we had quite a stretch of downside action into April, where we hit this lower yearly edge and buyers stepped in. I was a buyer down here. I really loaded up on my equity positions, especially in the Mag 7s. So that's good because we have climbed all the way back up to the upper yearly edge. Well, bulls created these pockets of demand here on this way back up. So there is a lot of demand below price, pockets of demand below price before price comes back to this larger demand zone. Let's take a look at the daily chart and just see what last week looked like from daily time frame perspective. So here we have Monday's candle. This is Monday's candle here. We had a big move to the upside on Monday, and then Tuesday, Wednesday, and Friday's candle just consolidated within the body of that big update on Monday. So interesting to see price found support here and closed right at the EMA cloud. This top line represents the 9 EMA on my EMA cloud. As long as bulls can keep price above this cloud is support. Price inside the cloud, I expect more chop. Again, that 6,000 level is an important level for bulls and bears. Bears want to get price below it and keep it there, and bulls want to stay above it. Other important levels to the upside for targets, potential targets, or what have you, will be the upper weekly edge here at about 60.93, then 61.32, and of course the all-time high, 61.66 and a half. Um, Downside support, the 6,000 level, then 59.82 and 59.60. As far as the daily demand zone and the zone I am paying attention to, it's right at 5,900. So if the bears can push and we have market weakness next week, bears will be pushing price down to this demand zone where buyers, I expect, will be stepping in at 5,900 to 58.13. Looking at the 4-hour chart, same thing. Your supply zone on this 4-hour chart is coming in at 60.93 by 61.09. You do have an area of resistance here at 60.61. Yesterday, price rallied up and actually wicked above this level, but you can see, as evidenced by the topping wick, there was selling pressure in here, as there was back on Wednesday, selling pressure here. So 60.61, I like to use the 4-hour chart for trades I'm going to be in for a week, maybe 2 weeks. These levels are key for me, those sort of time frames. Um, Again, 4-hour demand is down here at 59.70 by 59.09. But please note that since it has been created back here, it has been tested here and again, last week, actually, when our markets, the US markets, were closed on Thursday, on Juneteenth. So it has been tested twice, this 4-hour zone has. All right, let's look at the same thing for NQ. This is a process that I do every day, but especially when I am creating trade plans for the upcoming week. NQ, the NASDAQ is in a supply zone, price held above that upper yearly edge. That's what the bulls want to do. That's coming in at about 21,700. You do have these pockets of demand, just like with ES, on the way back to this bigger demand zone down below. On the daily chart, there is supply up here at 22,309 by the all-time high 22,450. Last week's candles look just like ES, and we stayed within the body of Monday's candle all throughout the week. Price is resting on the 9 EMA here, and you do have that crucial upper yearly edge that bulls want to hold price above and bears want to get price below it, 21,763. On the 4-hour chart for the Qs, you have a topping wick that was created yesterday. It goes in line with all of this selling pressure in the topping wicks previously in the week. 22028, that is a area of resistance. You can see here on Friday, price came down into this 4-hour demand zone and buyers stepped in. We have bottoming wicks here that shows buying pressure, selling pressure. All that to say that the markets really are in a phase of consolidation all throughout last week. Now, let me get started with some names that I am particularly watching for swing trades this coming week. I am interested in gold. I think it's important for me to show you the gold futures because I pay attention mainly to the futures charts when I have a symbol that I'm trading, but it has futures contracts. So looking at the GC futures here, you can see we have an all-time high at 3509.9. Let's call it 3510. This week was an inside week. This week's candle closed inside the body of the previous week's candle. You do have demand for gold futures down here at 33.33 by 32.07 on the weekly chart. On the daily chart for gold, gold actually was a little weaker this week than what I expected, giving the markets really didn't do much. Gold actually pulled back on Monday, which is pretty typical. Gold tends to be a more defensive area when people are unloading tech names or the more risk on names. Gold will rally and vice versa. So on Monday, when the ES and NQ had the big up candle, gold had a big down candle. And what the surprised me was the weakness in the days that followed. Now, gold very well could be coming back to 33.44 by 32.69. I would be a buyer of gold in this demand zone, and I will show you my exact plan on GLD, which is how I personally trade gold. Demand zone on the 4-hour chart for the gold futures 33.53 by 33.13. You have areas of resistance on the way back up to supply 34.55 by 35.10. All right. So now for my trade plan for GLD, this is what it would look like. I have this demand zone that is going to line up with that gold futures demand zone. It is at 308.37, and then I would be using this key Fibonacci level as my stop, which is 304.69. So my risk is the width of this zone. I intend to start a position here towards the top of the zone near 308.37. That's lining up with your daily 21. I don't necessarily trade based on the daily 21, but when I see that it is lining up with a demand zone, it piques my interest. So I would be starting a position here with half allocation and then plans to add to that position near 306.50 by the bottom of the zone, 304.69. For me, a stop would be a candle close below 304.69, giving me a risk of approximately $3.70. As far as my first target to scale out, that's going to come in at 313.68. And then targeting next the all-time high 317.63, which would be a reward of $5.30 and $9.30. I would be trading the July 3rd 308 calls. So you know what my plan is ahead of time. I stick to my plan, trading always with discipline. That is my key to if I've had a successful week or not a successful week. Did I trade my plan? Next, I'm going to talk about AEM. This is a gold miner. It is the gold miners and gold are showing relative outperformance over the overall market on a 3-month look back and a monthly look back. So for AEM, if TOS ever loads here, I would be trading it off of the weekly buy and sell zones. Come on, TOS. Sorry, guys. It's thinking. Try it again. It might be stuck. Let's look. Let's just go here. So let me show you the weekly plan for AEM. So, of course, I want to buy in demand and then take my profits at my sell levels. And for AEM, my buy zone is 117.75 by 115.01, giving me a risk of about $2.75. My trim or scale out targets are 124.70 and 129.86, giving me a reward of 7 and $12. My stop would be a weekly candle close below this 115.01. Now, if that scares you, you're not alone. I know many people would be scared about that, but I am able to stay committed to that candle close and my plan because I trade with an allocation amount on each trade that I'm comfortable with, that if it went to zero, my position went to max loss, the amount I trade with would not wreck my trading account. So I would be choosing the July 18th, 115 or 120 calls. Price is right in between there where I'd be buying. It's up to you. You choose whether you trade in the money or slightly out of the money. My first target is well above that 120 call. So I will more than likely trade the 120s here in the buy zone. All right. That is AEM. Next up is a name that I had on my watch list last week. And unfortunately, I just never got the pullback that I was looking for. Sometimes that will happen when you are trading names that are outperforming. But I don't deviate from my plan. I stick to the plan, no trigger, no trade. It's as simple as that. For ASTS, I am now looking for a pullback to this demand zone here on the daily chart. That is 41.31 by 38.76. My stop would be a daily candle close below this zone. As far as targets go, 45.94 and 48.94 are my first two targets. At 48.94 is an all-time high. That gives me a risk of 2.37 and rewards of 4.63 and 7.63. Now, if ASTS goes on to make new all-time highs, I do have Fibonacci extension targets above that I can target. So with ASTS, I would be choosing the July 18th expiration, the $40 calls, which is in the middle of this zone. And I would trade it to plan. I can see that the EMA cloud is slowly creeping up to this zone. So I have an alert set there. If this alert goes off, I'll switch to this ASTS daily chart and execute my plan as I have already mapped out. That's so important to have your trade plans mapped out ahead of time so you're not just shooting in the dark. Next up is SOXL. This is playing off the relative strength of the semiconductor sector, which from a monthly and 3-month look back are looking is that sector is looking very good. So I would like to get an opportunity to buy in this demand zone here, 1971 by 1822. I love that the 21 EMA is in the middle of this zone. This zone is in the middle of the daily EMA cloud and a nice buying opportunity for me because I have a confluence of different indicators all lining up there. If I run some Fibonacci's of this recent rally on SOXL, I can see that the golden pocket is also inside of my zone. So just further confirmation using some moving averages, using demand, and using those Fibonacci levels that this for me is a good probability, high probability setup. The risk would be $1.50 and reward 258 and 401. The supply zone where I expect selling pressure is up at 2372 by 2869 with 25, basically 2531, a key level to go ahead and take some profits at inside of this supply zone if I have multiple contracts left up there. I would be choosing the July 18th $19 calls on this trade. All right, up next. We have sorry, I just noticed that my chart wasn't given real-time data for a second, but I guess we're back now. Up next is PLTR, Palantir. Had some great trades in this over the last little bit, but I'd like another entry on Palantir. It showed some weakness yesterday. It had started pulling back from this supply zone and I'm interested in this zone on the 4-hour chart because of this imbalance candle. What I mean by imbalance candle is it is larger than your typical small little tight ranged candles. So if price pulls back to this area of imbalance, I expect buyers to show up in here 133.15 by 129.41. That gives me a risk of 374 on this trade. And as far as rewards, I would be trimming here at 139.53 and then 142.13. Obviously, that all-time high would be the next target. But those two trims give me a reward of 638 and 898. Now for Palantir, I don't need as much time on the trade because it moves and it moves fast. So I would choose the July 3rd expiration and 133 or 130 calls. The reason why I have two calls here is because if on Monday or Tuesday or whatever day we have a very weak uh, down day, right? If this triggers, my alert triggers here at 133.15, and we're just showing a lot of weakness on a name like Palantir, I want to be patient. So in being patient, if price comes down to the 131 level and I get a confirmation via higher lows or a trendy turn signal inside of this zone, that's when I would be looking to enter the trade. And if I don't enter here and I enter down here, I would be choosing the 130 calls. All right. So that's my trade plan for Palantir going into next week. Up next, I have SoFi on my list to trade. SoFi, I would be using the weekly chart. The buy zone for SoFi or the demand zone is down here at 1430 by 1274. I do have an area represented by a trendy edge down at 1337, so I would scale into this trade. As far as reward goes or my scale out targets, I have an upper yearly edge here at about $16 and then a Fibonacci level at 1610. That would be my first scale out. Then the 887 at 1731 and then 1842. Those are some targets to the upside. From a risk to reward perspective, the risk is about $1.56. That first reward is not great, but it is better than 1 for 1 at $1.80. My next reward is much better at 301. For this trade, I would choose the August 15th $13 calls. I want them to be at the money here near my second entry. So I wouldn't choose the $14 calls, but rather the $13 calls. And again, trading off of a weekly chart, I am committed to a weekly candle close. All right. Up next, after SoFi, I've got a couple of popular, socially active names that caught my attention for potential trades. CLS, I've been watching this one for a few weeks now. I just haven't gotten an entry. We created some weekly demand here after creating this zone about 3 weeks ago. It has been 3 straight weeks up now, 3 white soldiers here, and is showing a lot of relative strength. It has an all-time high of 144.27 and price closed above this 887, which is a key Fibonacci level in trendy Fibonacci. So I am looking for a 95% probability that we make a new all-time high, timing being the variable. I have to consider the overall market sentiment when assessing what that timing would look like. So, if next week is a down week, then I need to be patient with my entry here on CLS. Let's change to a daily chart and see where those zones are coming in. 121.03 by 117. And on the weekly chart, you can see that is going to be right at the top of what we call the bull channel. So in here, we created an inside and up, right? And this lines up with a daily demand zone. So this is the zone that catches my biggest interest here on the daily chart. But that zone is $14 away from where current price is at. And the weekly ATR on CLS is about $15, meaning that I would expect if it follows that weekly ATR that price wouldn't be back down to this zone if we have weakness next week until towards the end of the week. That's why it's not really a trade plan, but I want it on my radar regardless, because if for some reason we get a huge flush down and price were to come in here, say Tuesday or Wednesday, I would still set the trade up and enter it at this demand zone. Looking at a 4-hour chart for CLS, 133.86 is the first area of support here. This topping wick gives me caution, and on Friday, price came up to this supply zone and definitely rejected and rejected big there. The next area of support is at or around 128.14. That's also very close to next week's lower weekly edge, which on a 4-hour chart I love to trade off of. So this area down here is of importance to me. So I'm going to go ahead and create an alert that if CLS pulls back near 128.65, I will be alerted and can decide on a 4-hour chart if I want to make this trade. Now, if I make this trade on a 4-hour chart, trading this lower weekly edge, I would use this structure in here for a stop. And that's going to be at about 125. So about a $3 risk there. Then what was support becomes resistance. That's going to be about a $5.50 reward, and then back up to the upper weekly edge, which would be a target if I'm trading edge to edge, is about 138. So a good risk to reward at the target of about $10 with a $3 risk. All right, that's what I would be looking at for CLS. Now, when I'm trading a trade and I only intend to be in it for a week, I will give myself a little extra time. So I wouldn't choose the June 27th expiration. I would look at the July 13th, um, July 3rd expiration, or possibly the July 10th expiration. That doesn't sound right. July 4th? No, July 5th. Yeah. All right. After CLS, another social sentiment type of stock that I found is TSSI. And this thing, what a move from $6 back when the market was in a downtrend. TSSI was also in a downtrend, sitting down here at about $6.50. And then boom, up she went. Very, very, very nice price action on this name on the weekly chart. Last week, we created demand here, and 2 weeks ago, we also created demand. So you got a lot of demand all the way from 1965 to $5. I don't want to mark just a solid green zone on the weekly chart here. I'm using these Fibonacci levels to get an idea. Where would I like to buy a dip on a name like this? Now, notice the 1965 to 1509 on the weekly, and that would be a pullback to the weekly 9 EMA or this EMA cloud here. So 1965 to $15 is an important level on CLS. Now let me look at the daily chart and just see if I have any kind of demand in that area. I can see here the demand zone is going to be at about 17 and a half. By that 1509, that is also the golden pocket. So if I draw a gray zone right at this golden pocket, that'll tell me this is the area I'm looking to buy. That also lines up with the daily 21. So I'm really liking that area right away because I have some confluence of moving averages, and Fibonacci levels, and a daily demand zone. So I'm going to mark that area and create an alert there. I'm not going to create an actual trade plan, so to speak, but I can tell you if we look at the option chain for TSII, first off, I want to know some targets. This all time high and this upper weekly edge, that's going to be a target, $26 to $27. And then I would also need some extension targets. So if I run a Fibonacci extension, from last week's move, I like to use somewhere between the 236 and the 382 extension, and then the 618 extension and the 100 extension. So that'll give me some extension targets above the all-time high. So the first target from this zone of 1737 would be up here at the upper weekly edge and the all-time high, 26 by 27. Then I'd be targeting 29 and a half, 32, and 35. So you can see we got a very nice risk to reward because the risk on this is only about $2.25 and the reward is about $8, $9. So that is looking great. Now, if for some reason this zone breaks and price we get a daily candle close below 1509, I would just stop out of the position. When trading these socially charged names, it's really important to follow your trade plan. So if you put the trade on expecting this risk, and you need to stick to that. All right. So that is TSII. Now, I am going to go over some key levels of the Mag 7s on a daily time frame chart because I know a lot of people like to trade the Mag 7s, myself included, but I for this week at least am just in equity on those. The demand zone for Apple on the daily chart, this is a buy zone, or if you're short Apple, this would be a target, 198 to 195. The supply zone or the sell zone on Apple is 203.50 to 206.24. So if you're looking to go short, this is an area that I would look to go short from, and this would be the target. So these zones can be used whether you're looking to go short or you're looking to go long. It doesn't matter. We're wanting to buy the dip in the green zone, and target is the red zone. We're wanting to sell the rip in the red zone and target the green zone. Simple as that. Now let's look at Amazon on the daily. Amazon's demand zone or buy zone is 206.55 to 201.70. The sell zone is 215.09 by 217.96. If for some reason you're wanting to short Amazon, this is the zone I would do it from, and I would target down here at the demand zone. If you're looking for a buy the dip opportunity in Amazon, this is where I would set up a trade scaling into the trade and then targeting the supply zone. For Google, let's take a look. The demand on Google is down at we're going to call that 160 by 147.84. This is a wide zone. You had a little gap in here and then a go. All right. So if you are not comfortable with $12 of risk, one way you can not necessarily reduce your risk, but reduce the amount you're paying for the contracts is either scaling in, so starting a position towards the top and adding at the middle of this zone where that gap would be filled and then your stop is below the zone, or taking a more conservative approach, not getting in right at the touch of the zone, but waiting for the confirmation. And if price were to fall back, fill that gap, you can enter here at 154.17 or a reclaim of the top of this zone. That's one way you can reduce some risk there. As far as supply goes, 176 to 181, that is the zone I would be targeting if you're buying the dip on Google. If you're going short, this is the zone that I would do it from, and I would target the demand zone below. As far as Meta goes, Meta has been an outperformer all year, but it did have a pullback on Friday. So, what would I be looking for on Meta? The buy the dip zone on Meta is 66857 by 63278 with a stop in the middle there at about 652. The target zone is 716 by 741. That 741 is the all-time high there. This is the buy zone for me on Meta if I were looking to trade it to the upside, and I would be targeting 716 by 741. Microsoft, what a nice move ever since earnings, just up, up, and away. I mean, huge gap to be filled here. It doesn't have to be filled. Timing the variable, obviously, but you do have a gap that was created on that earning. I believe it was the earnings report. But let's talk about the more recent price action on Microsoft and where I would be looking for a dip buy. Now, a more aggressive dip buy is here at 475. This isn't exactly an inside and up, but price did consolidate right here at this 475 level, and you have the EMA cloud lining up there and a lower weekly edge. So, a more aggressive is to buy a pullback at 475, and then of course you're targeting the all-time high. A demand zone that has not been tested down here is 470 to 466. It's still targeting the all-time high here. But if I were to enter at that demand zone, that means there was a pullback to that demand zone. And so I would want to know where that golden fib is of that pullback. And I personally would scale out at least at the 618, if not the 38.2. All right. Then for NVIDIA, unfortunately, NVIDIA has just kind of been stuck and it's been stuck for a week and a half, maybe 2 weeks. We're just trading in this range. You have demand on the daily chart at 138.78 by 132.92. As far as supply goes, that's at 148.37 by the all-time high of 153.74. The 145 mark has been like a brick wall for NVIDIA. And so bulls need to get above there and then hold that as support. We've wicked above there a couple of times this week, but bulls couldn't hold the line, so to speak. So that's what bulls need above 145 and hold it as support. Then I would be targeting 148 by the all-time high 153.74. But a pullback to Nvidia here is, in my opinion, a good buy the dip opportunity. It has been tested one time, so just be aware of that. For Tesla, now I have some TSLL contracts all the way out to December that I am in. They're still doing really well. I bought the dip when Trump and Elon had their little tantrum on Twitter, or X as it's now called. And those contracts are doing great. So, what has happened with Tesla? Well, ever since the big pullback, then we got the rally, and now we are chopping between 335 and 310. There's not a lot that can be done between these two levels. Either the bears push price below that 310, then we're coming back to this demand zone, or bulls push price above 335, we're coming up to this supply zone. It's very simple how you trade this. For me, it is if you want to trade the chop that is, then you're wanting to buy lower on on the curve of the chop. So down here near 316 to 310. And if you're wanting to sell the rip in this chop, then you're wanting to short somewhere between 330 and 335. And you can play the back and forth action between these levels, about $25 range there. The bigger levels, though, are the demand zone down here at 285.50 by 259.63, and the supply zone up here at 345 by 3, I'm going to call it 368. All right. So that is what I have for you this week. The names that I am watching again are gold, AEM, ASTS, SOXL, that's a leveraged ETF to play the semiconductor stocks. Then I have Palantir, SoFi, and I'm watching some social sentiment names, CLS and TSSI. So I hope you have a great week of trading. If anyone has any questions or anything like that, I would be happy to answer them. If you have a chart request, something you want to look at that I did not cover, I'd be happy to cover that as well. You can just put that in the chat. I think that I can see the live chat. If someone could say hi or something in the chat to see if I'm seeing the live chat, that would be awesome. This is only my second live, so I'm not an expert with YouTube Live for sure. Does anybody have a name that you want to look at? And if you are, uh, hymns, awesome. Thanks, Tan. At least I know I can see the chat now. So, hymns, I'm going to give you my daily chart. This thing is nice. We've played hymns a couple of times. The supply on hymns is at 65 by the all time high of 72.98. Now, this zone has been tested, Tan. If you see here on May 14th, price came back up there and rejected. And then again on June 3rd, price came up here. You got that big rejection. That's where price consolidated and we created some demand down here at 56.75 by 52.75. If you're in hymns, congratulations. I say it's looking great. I wouldn't be as scared of this supply zone as now because it has been tested a couple of times. If it were a fresh supply zone, I would definitely be protecting my profits up here at 65. But the zone has been tested twice. So, price above where price is at right now, 65, then 67.37, and finally the all time high up there is near 73. We created inside and up right here. So I would expect some support here at 60.48. The buy zone, though, for me, it would be 56.75 by 52.75. Hims has a nice squeeze if you use the TTM squeeze or the Squeeze Pro. Very nice daily squeeze on this. We created a rounding bottom here. That's beautiful. Here's your upside targets, and good luck with that one because it's looking great. From a Fibonacci perspective, if I look here where, it consolidated and then got this nice run, if I run some fibs from there, if you're already in the trade, I'd say as long as that 60.48, maybe $60 holds as support, I'd stay in the trade. Okay. Shiva, given the market conditions, would you still go with long swing positions? Yeah, Shiva, you say given the market conditions, but if I look at the overall market, the S&P 500, there's just nothing that says to me, uh, load up on shorts. There's also nothing that says load up on longs, but I will take a buy the dip opportunity in those relatively strong areas of the market. Yes, you got a topping wick here, but I mean, we closed above where we opened. We are above the upper yearly edge. So all signs right now, albeit choppy, I'm just not getting the sign. Not saying it couldn't happen, but I'm not seeing anything that gives me caution and wants me to get out of all my long positions. I would be more cautious in trading names that aren't outperforming, but how I build my watch list are on outperformers. So I'm not real quote unquote scared here. Tan says my entry from Hims is $30, sold half around 62, seeing where it could head. Awesome. Well, it sounds like you have a very nice entry, number 1. Congratulations, all the way down here at $30. So if this is more of a longer term type hold, then I definitely want to look at a higher time frame for you. 51.24 is the bottom of the bull channel. As long as price holds there, that you have a beautiful rounding bottom there, and then this week a nice up candle. Next target on HIMS from a longer term type hold is, of course, the all time high near 73. Above there, where could it go? And I don't know if you have equity or what, but I would run Fibonacci extensions. And I'm actually going to go up to the all time high and say that some key levels would be here between 83 and 90, and then 98 to 115. All right. Let's see. Venkatesh on SOXL just wanted to know the expiry you're considering. How do we find that? They're always on my charts. So let me show you on that SOXL. I like to put the notes on the charts so that you can see them. I'll give you that data right here. I would be buying the July 18th $19 calls. Okay. Joseph. Oh, have a great weekend, Toro. All right, guys, that is my time. I'm going to go ahead and get ready for the family reunion. I hope y'all have a wonderful weekend. Thank you for joining me. I will do this each week, but I want to say next week I will actually be out of town. I'm just driving over to Jacksonville. It is my one of my brother's 50th birthday. So I will be in Jacksonville next Saturday and will not be able to go live, but I will, if you're in the trendy trading room, of course, I will have the charts in the notes section and you will have all of my trade plans, but I will not be going live next Saturday. I hope y'all have a wonderful weekend and a wonderful week in trading. And if you haven't already done so, please hit the like button on this video. Make sure you're subscribed to the channel. I put new content out every week, several times a week, actually. And I appreciate your support as always. Have a wonderful weekend, fam.